there is no question that human rights performance is material. In other words, it matters to shareholders how companies, particularly in certain sectors like the extractive sector, apparel and so on, there is no question that companies managing human rights is an important issue commercially. It's a material issue for us to be looking at. Markets really should be doing three things. They should be analysing corporate performance. They should be allocating capital to companies that do this stuff better, perform better on human rights and business issues. And then the owners, particularly the equity owners, should behave as owners of firms. And at the AGM, for example, say well done, vote in favour of those individuals that do this well and vote against those that get this badly wrong. For example, if we're talking about the director in charge of health and safety and fatalities have shot up, arguably that person shouldn't be re-elected unless there's a decent explanation and measures have been put in place to make sure it doesn't happen again. That person shouldn't be re-elected. So the threefold framework that I'm promoting is that the investors should analyse business and human rights performance. They should then allocate capital to companies that do it better, and then those companies that they own that maybe aren't doing it as well as they should behave as good owners. Now that is how the market should work, and it's failing at the moment at the first hurdle. You don't have that analytical environment. You don't have investors analysing corporate performance on business and human rights because it's pretty complicated. We will now be able to have that analytical environment when the corporate human rights benchmark vision is realised. Over time, we will rank the top 500 companies in the world, sector by sector, looking at the sectors that are most salient from a human rights perspective first, and then we will have, in an open source collaborative way, engage with stakeholders from around the world to develop criteria that people generally speaking think are sensible, a weighting environment that people again generally think is fair to weight these different criteria, and then ultimately we'll come up with a score which will be relative, so you'll be able to see who are the best and who are the rest, and we as owners of the companies that may not be performing well will then know which of those companies that are not performing well, and we'll know that also stakeholders can see that, and at that point the business case for the company to deal with these problems becomes even more compelling because of course they will be open to challenge and scrutiny.